Okay, let's unpack this. The sheer volume of information just bombarding us daily about the markets, potential trades, uh, it can really feel like trying to navigate a hurricane of data, can't it?
Absolutely. It's overwhelming.
So what if there was a way to, not just stay afloat, but to actually chart a clearer course,
Hmm.
especially when it comes to the, well, often murky waters of options trading?
Right.
That's exactly what we're diving into today,
Yeah.
exploring how strategically using AI prompting might actually offer a genuine edge.
Yeah, that's right. And look, if you've ever felt kind of lost in the world of puts, calls, all those Greek letters, or maybe just wished for a more focused approach to your options strategy, well, this deep dive is really for you.
Hmm.
We're not talking about some, magic AI crystal ball predicting guaranteed return. It's not that.
No, definitely not.
Instead, we're really focusing on how you, no matter your current level of trading knowledge, can actually harness AI to ask better, more insightful questions and, ultimately make better informed decisions.
And to guide us through this, we're going straight to a pretty compelling resource, AI Prompting, The Brutal Options Trader's Guide by Grok 3.
Right.
Now, that title alone kind of signals this isn't some abstract theoretical chat, right? It's a direct, maybe even no-holds-barred approach to using AI as a practical tool in your options trading toolkit.
Exactly. And what I think is really compelling about this guide is it's laser focused on moving beyond all the AI hype. It really drills down into tangible applications.
Yeah.
It's less about what AI might do someday and much more about how you can actively use it, like right now, to sharpen your understanding and refine your strategies, particularly in the, let's face it, nuanced world of options.
Precisely. So our mission today is pretty straightforward. We want to explore how AI prompting can empower options traders, at all levels. Folks just starting out, seasoned pros to ask better questions, identify those critical blind spots we all have, and ultimately navigate the complexities of options trading with hopefully greater confidence and a clearer vision. We'll be looking at real-world examples, pulling out the core insights, and giving you actionable takeaways.
And it's really important to stress, just like the guide does, that options trading, especially selling options, it revolves around probabilities.
Hmm.
It's not about having that crystal ball because, let's be real, nobody does, but it's about understanding and playing the odds. And AI prompting can be a seriously powerful tool in helping you assess and understand those probabilities more effectively.
Okay, so let's plunge into the realm of option selling first. Because, as Grok 3 points out, that statistical edge often lies there, right?
Yeah, really, yes.
But he also delivers a pretty stark warning right off the bat, doesn't he? Selling options, puts, calls, straddles in the whole, can look like a reliable way to generate income,
It can seem that way.
but it's definitely not risk-free.
Not at all. The guide uses a really good analogy, actually. It compares it to running an insurance company. You collect premiums, right? But one single unforeseen event, a black swan, can have absolutely catastrophic consequences. The edge in selling comes because, well, most options expire worthless, statistically.
Right.
That gives sellers an edge, but it demands constant vigilance and a really deep appreciation for risk.
And this is where AI prompting really starts to, show its value. Grok 3 lays out 8 distinct prompting frameworks, and he shows how each one can apply to option selling. Let's start with role-playing. How can that help someone selling options?
Well, the fascinating thing here is how role-play prompts can kind of force you to think about scenarios you might otherwise just brush aside.
Okay.
For instance, the guide suggests prompting the AI to act like, say, a hedge fund risk manager. Then you ask them to walk you through the absolute worst-case scenarios of selling cash-secured puts on a stock that's known for being volatile, like TSLA.
Ooh, okay.
Yeah.
I can definitely see the value in that. Instead of just kind of passively thinking, hopefully it won't drop too much, you're actively engaging in a sort of simulated stress test.
Exactly. The AI can then detail potential margin calls, sudden spikes in volatility, the risk of the stock gapping down significantly overnight, things you might not want to think about.
Yeah.
The guide even mentions the 2020 TSLA surge, where a lot of put sellers got caught completely off guard. A role-play prompt back then could have pushed traders to model a huge overnight drop, maybe leading them to take more conservative positions or put on some protective hedges.
That's a really effective way to uncover those hidden weaknesses in your strategy. Okay, what about the Socratic prompting framework? How does that connect to the discipline you need in options selling?
Right. Socratic prompting is all about asking probing questions to really clarify your own logic. So, in the context of selling options where discipline is absolutely key,
Paramount, yeah.
you could prompt the AI to ask you really detailed questions about why you're selling a particular credit spread, betting on a limited price range, say on the S&P 500, the SPY.
So the AI basically plays devil's advocate, or like a critical analyst, pushing you to really justify why you think this is a good trade.
Exactly that. It can reveal if you're maybe just chasing a high premium without a solid grasp of the market conditions, or if you actually have a well-reasoned thesis behind it.
Hmm.
The guide points to what happened in 2022. A lot of traders sold SPY puts thinking the market would stay stable, but they got blindsided by that big downturn. Socratic prompts could have maybe highlighted an over-reliance on, say, a specific Fed policy and the potential for a market correction that people weren't seeing.
That makes total sense. It's like having an objective third party kick the tires on your assumptions before you put money down.
Yeah.
Now, options adjustments. They can be notoriously tricky. How can instructional prompts help there?
Instructional prompts are great because they're designed to give you step-by-step guidance on specific tasks. So when you're selling options, this can be invaluable for understanding how to manage positions that start moving against you. The guide gives the example of adjusting a losing iron condor. That's the strategy with 4 options contracts defining a profit zone. You could prompt the AI to teach you, almost like an experienced floor trader would, the different steps involved in, say, rolling the position to different strikes or expirations, adding or removing legs, or even just figuring out when it's time to cut your losses.
So instead of feeling totally overwhelmed by complicated explanations or
No.
just freezing up,
Right.
you get a clear, actionable breakdown of what you need to do.
Precisely. The guide mentions the 2018 VIX spike that caused huge losses for many iron condor sellers. An instructional prompt could have walked traders through rolling the untested side of the condor to a safer spot, maybe mitigating some of those losses.
That's a fantastic application. Okay, lastly, for option selling, how can tool use prompts be helpful?
Tool use prompts basically leverage the AI's ability to chew through and analyze massive amounts of data really quickly. So for option selling, you could use these prompts to scan the market for stocks showing unusually high implied volatility. High Cyber often presents attractive opportunities to sell option premium, right?
So the AI acts like a sophisticated market scanner, pointing you towards potentially profitable situations.
Exactly. The guide highlights how in 2023, earnings announcements for companies like NVIDIA, NVDA, led to a huge spike in implied volatility. A tool use prompt could have flagged NVDA as a prime candidate for selling a strangle that's selling both an out-of-the-money call and letting traders potentially grab a big chunk of premium pretty quickly.
So the core idea here with option selling seems to be that AI prompting isn't about predicting market moves. Forget that.
Right, impossible.
But it's about really deeply understanding probabilities, rigorously stress testing your ideas, demystifying complex mechanics, and efficiently finding potential opportunities.
Absolutely. It's about using AI to become a more informed, more disciplined seller, constantly challenging your own biases, forcing yourself to consider different angles and potential risks you might have missed.
Okay, now let's switch gears. Let's talk about the riskier side of the options coin. Buying calls and puts. Grok 3 doesn't really pull any punches here, does he? Calls it a high-risk, high-reward gamble. What makes it so tough?
Well, the main attraction, obviously, of buying options is the potential for huge percentage gains with, a relatively small amount of initial capital at risk. That's the lure.
Like the leverage.
But the harsh reality is that most options buyers actually end up losing money. Often it's because they jump into a trend too late or they get eaten alive by the silent killers. Time decay theta, and that contraction of implied volatility after a big event, IV crush, both just erode the option's value over time or suddenly.
So how can AI prompting help buyers navigate this, pretty challenging landscape?
Well, again, AI can't predict market direction with certainty. No one can. But it can help buyers refine their timing for entry and exit, manage risk more effectively, and maybe avoid those impulsive, emotionally driven YOLO trades we sometimes see. The guide introduces the persona prompt here as a really valuable tool to fight against our own biases.
How does that work exactly? You're basically telling the AI to adopt a specific personality.
Precisely. For example, you could prompt the AI to act like a really seasoned, maybe even cynical options trader who's seen it all, market fads, bubbles bursting, you name it.
Okay.
Then you could lay out your plan for buying calls on a hot meme stock and ask for their straight-up, brutally honest feedback.
Huh. I could just imagine the kind of blunt assessment you might get. Especially thinking back to the whole GameStop GME frenzy in 2021,
Exactly.
where so many new buyers jumped in late, paying insane premiums.
Precisely. A persona prompt like that could have cut right through all the hype and warned about those unsustainable IV levels, the high chance of a sharp drop, potentially saving traders a lot of money.
That's a really effective way to get an objective, maybe even critical,
Yeah.
look at a trade that might be driven more by emotion than logic. What about using template prompts for buying options?
Template prompts are great for injecting some structure and discipline into what can often be a pretty impulsive decision buying options. You could create a template that outlines specific objective criteria for buying calls on, say, SPY based on predefined technical signals, like a confirmed divergence on the RSI indicator.
So it's like setting up a checklist that you absolutely have to follow before you hit the buy button.
Exactly. It forces you to make sure your decision is actually based on a thought-out logical strategy, not just a gut feeling or, fear of missing out.
FOMO, yeah.
The guide cites an example from 2024 where a trader used a template prompt to formalize a technical breakout strategy on SPY. It helped them catch a significant move up with call options while sticking to their preset rules.
That makes a lot of sense. Helps prevent those spur-of-the-moment buys. Okay, now how can zero-shot or few-shot prompting be applied here? Sounds a bit more technical.
Yeah, these types of prompts leverage the AI's ability to kind of extrapolate from just a few examples or adapt to new situations with minimal input. So, for instance, you could use a few-shot prompt by giving the AI maybe 2 or 3 examples of how you usually analyze market catalysts before buying calls.
Okay.
Then you could ask it to suggest a potential trade setup for, say, the QQQ ETF based on upcoming Fed announcements, even if the AI hasn't seen that exact scenario played out before in its training data.
So you're kind of building on your own analysis framework,
Okay.
but using the AI's broader knowledge base to potentially spot new opportunities or maybe just refine your approach.
Precisely. The guide shows this with an example from 2023 where a trader managed to anticipate a move in QQQ calls before a surprise Fed rate cut. They built on their existing method for analyzing economic news with help from a few-shot prompt.
Interesting. So with options buying, it seems like AI prompting can help you be more disciplined, get objective feedback on your ideas, and maybe refine your timing and analysis. But those inherent risks of time decay and IV, of course, they're still huge factors, right?
Absolutely critical. AI is a powerful tool to augment your decision-making, but it cannot eliminate the fundamental risks baked into buying options. Understanding those risks inside and out is non-negotiable for any options buyer.
Which brings us neatly to risk management. Obviously crucial in all trading, but as Grok 3 points out, it's often something people don't pay enough attention to until, well, it's too late.
Right.
How can AI prompting help traders get better at managing risk?
AI can be a really powerful ally in forcing you to actually quantify and plan for potential risks. That's something easily overlooked when you're chasing potential profits, right?
Yeah, absolutely.
Data analysis prompts are particularly good here. You can feed your historical trading data into the AI, maybe just a simple spreadsheet, and ask it to find recurring patterns in your losing trades.
Whoa, that's a fascinating idea. So the AI acts like an unbiased auditor of your own trading history, highlighting mistakes you might not even realize you're making.
Exactly. The guide gives an example of a trader back in 2022 who discovered, using a data analysis prompt, this consistent pattern of losses whenever they traded on FOMC announcement days.
Huh.
That data-driven insight led them to just implement a simple rule: no trading on FOMC days. And apparently, it significantly improved their overall results.
That's a really compelling, very practical example of how AI insights can lead to real improvements in risk management. The guide also brings back the role play prompt here. How does that fit into risk management?
By simulating those extreme, maybe low probability but high impact scenarios, you could prompt the AI to act like the liquidation desk at your brokerage firm
Ooh.
and make it walk you through exactly what would happen if your short put options got assigned during a sudden severe market crash.
Okay, that sounds potentially quite unpleasant, but also incredibly valuable for preparation.
Right. It forces you to confront the reality of margin calls, maybe even the forced liquidation of your entire account. The guide points to the 2020 COVID crash as a perfect example, where role-play prompts could have pushed put sellers to prepare for a massive downturn, maybe by buying some VIX calls as insurance against that volatility spike.
So it's really about mentally and strategically prepping for those tail risk events that can just wipe out unprepared traders. And Socratic prompting also comes back in this risk chapter. What's the focus here?
Here, Socratic prompts are really useful for digging into the psychological drivers behind risky behaviors. Things like consistently putting on positions that are way too large for your account size or risk tolerance.
Hmm.
You could ask the AI to question your motives, to uncover if maybe greed is driving you, or FOMO, or maybe even an unconscious desire to quickly make back money from previous losses.
So it's about getting to the root cause of those potentially self-destructive trading habits.
Precisely. The guide shares an example of a trader in 2024 who realized, through this kind of Socratic back and forth with an AI, that they were slowly but surely increasing their position sizes, trying to chase back earlier losses. Recognizing that pattern allowed them to consciously dial back their size and stabilize their returns.
It really seems like AI prompting can be a powerful tool, not just for crunching market data, but also for getting a deeper, more objective understanding of your own trading psychology and your actual risk tolerance.
Absolutely. Risk management isn't just about numbers and probabilities. It's just as much about understanding and managing your own behavior. AI can act as that impartial mirror, reflecting back your potential weak spots and biases.
That leads us perfectly into the next critical piece, the mental game. Often underestimated, right? Grok 3 makes a strong case that trading is maybe 80% psychology.
Hmm.
Why such a heavy emphasis?
Because the market simply doesn't care how smart you are or how sophisticated your analysis is. Our basic human emotions, mostly fear and greed, can so easily derail even the best-laid trading plans.
Mhm.
Fear can make you cut winning trades way too early, while greed tempts you to hold on to losers for far too long, just hoping for a turnaround that might never come. And options trading, with all that leverage and fast price swings, just magnifies these emotional responses like crazy.
So how can AI prompting help us navigate or maybe even overcome these psychological hurdles?
Well, the guide brings back the persona prompt again here in this crucial context. It suggests you could instruct the AI to act like a seasoned trading psychologist, someone with, quote, no patience for excuses, who gives brutally honest feedback.
Huh?
You could then describe a specific time you maybe panicked and sold a winning credit spread way too soon, and ask for the direct, no-holds-barred assessment of your emotional reaction and your actions.
I can easily imagine that kind of straight-up feedback. Well, maybe tough to hear. Could be exactly what some traders need to break out of those ingrained bad habits.
Exactly. The guide gives a powerful example from 2023. A trader used this kind of a persona prompt to finally identify their recurring habit of exiting profitable trades too early, purely out of fear of giving back gains.
Hmm.
Recognizing that pattern through the AI's feedback actually empowered them to stick to their original plan more often, which led to much better overall returns.
And instructional prompts also show up again for strengthening the mental game. What's the angle here?
Here, instructional prompts can be really valuable for helping you build beneficial routines and habits, things that foster a calmer, more disciplined mindset, especially when the market gets choppy.
Okay.
You could ask the AI to give you a step-by-step daily routine, maybe modeled after what consistently successful traders do, like journaling your trades and your reasoning, practicing mindful position sizing, or even building in short meditation or mindfulness breaks.
So it's about using AI to help you formalize those positive, supportive habits that can act like anchors when the market's wild and your emotions are trying to take the wheel.
Precisely. The guide mentions a trader in 2024 who used an instructional prompt to build a really comprehensive pre-market checklist. This structured routine helped them avoid making impulsive trades during those high volatility periods, like around big VIX spikes or major news events.
It really drives home the idea that while AI can't just magically erase your psychological biases,
No magic wand, no.
it can be a remarkably valuable tool in helping you become more self-aware of your weaknesses and build the discipline you need to manage them over the long haul.
Absolutely. That self-awareness and building consistent, positive routines are just fundamental for sustained success in this tough game.
Okay, finally, let's briefly touch on more advanced option strategies, things like straddles and strangles. These can be really powerful for experienced traders, but they definitely bring their own complexities and risks. How can AI prompting help traders moving into these areas?
Yeah, for navigating these advanced strategies, tool use prompts can be particularly helpful. These let you really harness the AI's number crunching power to simulate complex trading scenarios.
Right.
For example, you could tell the AI to simulate the potential profit and loss outcomes of putting on a short straddle on Apple, AAPL, right before and after their earnings announcement, using historical implied volatility data as a key input.
So you get a data-driven preview of the potential risks and rewards of that strategy before you actually put real money on the line.
Exactly. The AI can quickly calculate key things like the break-even points, the maximum potential profit if the stock stays put, the maximum potential loss if it makes a huge move.
Hmm.
And it can also analyze how the Greeks, delta, gamma, theta, vega, are likely to behave under different conditions. That gives you a much fuller picture of the trade's dynamics. The guide talks about a case in 2023 where a straddle seller used this kind of prompt, saw a high probability of a big post-earnings gap in AAPL, and managed to avoid a significant loss because of it.
That sounds like an incredibly smart way to stress test these trickier strategies before you expose your capital.
Yeah.
But what about template prompts for advanced trading?
Template prompts can be really useful for standardizing how you execute and manage these complex strategies. For instance, you could develop a detailed template for selling weekly straddles on the S&P 500 index, SPX.
Right.
This template could include specific rule-based criteria for entering the trade, clear profit targets, preset stop-loss levels to cap your downside, and even specific triggers for making adjustments based on things like the position's overall delta or how much time is left until expiration.
So it's about creating a consistent, systematic framework for tackling these more nuanced, potentially more volatile trades.
Precisely. That systematic approach really cuts down on the chance of making impulsive mistakes when you're under pressure. It makes sure you're sticking to a well-defined plan. The guide shares an example of a trader in 2024 whose playbook for selling weekly SPX straddles, built using template prompts, consistently captured a good chunk of the potential profit because they diligently followed their predefined delta-neutral adjustment rules.
It really seems that with these more advanced strategies, AI prompting helps you both understand the potential range of outcomes through simulation and then execute and manage the trades more consistently and systematically.
Exactly right. It's about strategically using AI to navigate the inherent complexity and manage the often significant risks that come with these more sophisticated techniques.
Okay, so to bring this really comprehensive deep dive into using AI prompting for options trading to a close, what are some of the absolute key takeaways our listeners should hang on to? Let's start by recapping the highlights for option selling.
Yeah, for option selling, definitely remember the power of role-play prompts for stress testing those crucial what-if scenarios, like that sudden TSLA drop example. Socratic questioning is invaluable for really nailing down your trading thesis, making sure you're not just chasing yield blindly, like with the 2022 SPY put selling trap. Instructional prompts are super useful for demystifying complex adjustments, like fixing that iron condor during the VIX spike. And tool use prompts can quickly spot those high IV opportunities, like around NVDA earnings in 2023. The big theme: always focus on probabilities, not predictions.
Got it. And for those venturing into the admittedly riskier world of buying options.
For buying, persona prompts are great for exposing your own biases, like getting sucked into meme stock hype, remember GME 2021? Template prompts enforce discipline with rules-based entries, like that SPY technical breakout in 2024.
Right.
And few-shot prompts let you build on your analysis, like anticipating QQQ moves based on Fed news in 2023. But always remember, timing and risk management are critical. Watch out for that time decay and IV crush. They are relentless.
Absolutely. And risk management and that crucial mental game AI prompting offers big advantages there too.
Huge. Data analysis prompts find those losing patterns in your own history, like avoiding FOMC days from the 2022 example. Roleplay prepares you for crises, like that 2020 market crash scenario hitting short puts. Socratic prompts uncover psychological traps, like oversizing positions.
Yeah.
Persona prompts tackle emotional trading, like panic selling winners. And instructional prompts help build those positive routines to keep you steady. Bottom line: solid risk management and mental discipline are absolutely essential for survival, let alone success.
And finally, for those looking at more advanced option strategies.
For advanced stuff like straddles and strangles, tool use prompts are key for simulating complex scenarios. Think the AAPL earnings example from 2023 to really understand risk-reward. Template prompts help standardize execution, making your approach consistent, like with the weekly SPX straddles. The main takeaway: deeply understand the mechanics and test these strategies thoroughly, ideally simulating first before putting significant capital to work.
So it's crystal clear. AI prompting isn't some magic bullet, right?
Not at all.
But it's definitely a powerful, versatile tool. It can empower options traders, really at every level, to ask much better questions, effectively uncover their own blind spots, and ultimately make more informed, more strategically sound trading decisions.
Exactly. It's really about using AI strategically to bring some much-needed clarity to what is, let's face it, a complex and often very unpredictable market environment.
On that note, here's a final provocative thought for you, our listener, to chew on. Given this remarkable power of AI to rigorously stress test your core assumptions and identify your own weaknesses in options trading, what's one specific bias or tendency you'll actively use AI to challenge in your very next trading decision? Think about how you might apply these prompting techniques, not just in trading, but maybe in other complex, high-stakes parts of your life too.
Yeah.
Thanks for taking this deep dive with us.